Integration of prevailing multiple indirect taxes. As I said, the intent was to unify all those multiple taxes which existed under the erstwhile tax regime, be it a VAT, service tax, excise, and so on and so forth. The most important objective of the GST was preventing of a cascading of taxes, to eliminate the cascading effect, which means there should not be a tax on tax in the entire supply chain. That was the precise and the motive of getting GST into picture. Simplified compliances. As we all know, when India government came into picture, their only motive was ease of doing business and provide a simple way of doing businesses, less burden on taxpayers in terms of compliances. And the fourth objective of getting GST was credit available across goods and services. The entire supply chain, there should be a seamless flow of credit. So that was the intent and the object of getting GST into picture. Now, what is this GST, in terms of how does the GST framework exist? As I said, GST is a one nation, one tax, and therefore it's a destination-based tax on goods and services. It's a consumption-based tax or a destination-based tax which is levied on goods and services and is a single tax irrespective of be it a good or a service. So therefore, it's unlike the erstwhile regime where there was a different tax. For goods it was VAT, for services it was service tax, for manufacturers it was excise. But under GST, irrespective of it, there is a single unified tax which is levied on both goods and services. Now, this GST framework is levied on a value addition at each stage. It is the addition which happens at each stage in the process where the tax is levied to eliminate the cascading effect. This last and the foremost, what is the main intent of the GST framework was to give a liberal credit regime. There were certain restrictions which were the restrictions where the industries were not able to get credit. As a result of it, the output of the goods were getting costly. The intent of the GST was to give them a liberal credit regime. As a result, it would be beneficial both for the business as well as the end consumers. As I said, the GST is applicable on whole of India, including Jammu and Kashmir, with effect from 1st of July 2017, by the Constitutional Amendment Bill 101, 2016. Now, what has exactly changed and what still remains same under the GST is something we really have to look at. As I said, it was an integration of the tax levied on goods and services. Multiple indirect taxes came under the regime of goods and service tax. The VAT, today when we go to a restaurant, we don't see VAT, we don't see CST, we don't see service tax, we don't see excise. All these taxes are subsumed under GST. Now, what is the most important thing is that this is a tax on any form of supply. Earlier the tax regime was used to be on a sale or a manufacture or provision of service, but today the tax is on a supply. It is the trigger event for levying a tax is a supply and not being a manufacture, sale, or a provision of service. As I said that, there has been a change in the GST. The taxes have been subsumed under the goods and service tax. What still remains same is the basic custom duty on import of goods. The basic custom duty still remain the same. Is still the same as what existed even under the erstwhile tax regime. So therefore, the custom duty still exists even under the GST regime. Now, moving on to which are the key taxes which get subsumed under the GST law. Let's see what are the central taxes. First is the central excise. Second is the service tax. Third is the sales tax, countervailing duty, special additional duty, and lastly, as I said, the basic custom duty does not get subsumed under the GST. It still continues, which means if today I import an X commodity from, let's say, France or Paris, the basic custom duty continue to exist. Under the state taxes which get subsumed are value-added tax, which is also known as sales tax, entry tax, entertainment tax, luxury tax, lottery and betting taxes. What doesn't get subsumed are stamp duty, state excise, and municipal taxes. Now, today also we see that we pay a stamp duty when you buy a flat, when some agreement is executed. A state excise, it is still there on the liquor when the alcohol which is consumed in restaurant. So stamp duty, excise, and municipal taxes also we see when we receive some kind of a bill from, kind of a property tax or something. These are the municipal taxes. So these three taxes doesn't get subsumed. It is important for us to know that stamp duty, state excise, and municipal taxes have still not got subsumed under the GST and therefore continue to exist even under this regime. Now, which of the sectors which are still, left are not under the ambit of the GST? Let's see the sectors. Tobacco comes under the GST regime. Narcotics come under the GST regime. What does not come under the GST regime are the liquor for human consumption. The liquor for human consumption, what we do in the restaurant, it still is governed, as I said, is governed by the state excise and the GST is still not levied. Petroleum is another product which still have been kept outside the GST regime, but there are talks which are going on every day. We would see the news around it that, the different forums, ministries are saying that petroleum should be brought within the ambit or within the net of GST. Sale of real estate that is already constructed property is still outside the purview of GST regime. So if I buy a flat which is already constructed, it is still not covered under the GST regime. It will be the stamp duty which has to be levied on these sectors. So these are the critical taxes which have been subsumed and the taxes which have not been subsumed under the GST regime. Now let's have a bird's eye view of GST regime. What are the basic terms we see when we talk about, how does the GST look like at a broader level? We all see, when we go to a shopping mall or something, we all see that there's something called a CGST, SGST, and IGST. What are these concepts? Let's try and understand these things because these are the basic things when it comes to understanding a GST. We may go into further nitty-gritties and concepts while we are dealing with the top 10 concepts, but just to give you an overview of how does the GST looks like. As I said, that the levy of GST, as I said, it's a dual structure even under the GST regime. One is the intrastate supply and second is the interstate supply. Now, what is an intrastate supply? Let's say take a simple example. If today I'm in Rajasthan and I want to buy a good, let's say I'm located in Jaipur and I want to buy a good from Jodhpur. So Jaipur and Jodhpur being in the same state, so therefore it's an intrastate supply. The supplier is also in the state A. The place of supply, as I said, it's a destination-based tax. The goods have been delivered at Jodhpur, so both of them are in the same place. Therefore, the concept qualifies an intrastate supply, and therefore it will be CGST and SGST which shall be levied. Let's take what is interstate supply. Interstate supply is a supply where the location of the supplier or the place of the supplier in two different states. Now, let's say I'm in Rajasthan and I want to deliver a goods to, let's say, Maharashtra, Bombay. So I am the supplier located in Rajasthan. The goods are getting delivered in Maharashtra. So there are two different states. It's a destination-based tax and a consumption-based tax, as I said. So therefore, the movement of goods gets terminated in Maharashtra. The transaction qualifies as an interstate supply. And therefore, we will see on that particular transaction, there will be a levy of IGST. Now, there's certain fallacies under the GST design, which are very interesting to know and which we have been reading it for almost so many, I think we've been reading it in news. Lassi is exempt from GST, but not flavored milk. Paratha is not roti, but must tax at 18%. Papad does not attract GST, but frames do attract 18%. So therefore, this gives a very important, do we really know this? All these concepts actually give us a very important point to think. Classification, the correct classification of goods and service under GST regime plays a very critical role. Why do I say that is because, let's say an example of lassi, which is exempt from GST, but not a flavored milk, is something very interesting, while both of them are kind of a flavored milk. Paratha is not considered roti, but taxed at 18% is something, it's something which is, we may not be able to believe, not being an indirect tax professional, not reading the classification as a layman, if I've been asked. For me, it's one and the same thing. Both are made out of wheat or maybe made out of something called maida. But at the end of the day, they conceptually remain same. Then why there is a difference under GST? Papa does not attract GST, but Frams attract GST at the rate of 18%. So, there's a lot of fallacies which are being there under the GST law, which need to be understood. And probably when you or anybody as an aspiring indirect tax professionals or a law student, or we litigate over a period of time, these questions will be answered, but probably still remains a point of litigation for all of us. So that's how broadly the GST regime works, which we say intrastate supply, interstate supply. So these are the words which I'll often use while we are deliberating on this topic today. Now, understanding how does under the GST, the transaction flows is important for us. Now, this is the flow of ITC and output tax under the GST design. This is a very simple example, which I'll try and explain you. Let's say a business entity. We are into a business of hardware. The business entity imports, let's say, certain hardware from France, let's say, chairs. They also import certain services, let's say, software services are also getting imported. Certain domestic purchases are also done, let's say, stationery or some nuts and bolts. And certain services like housekeeping or cleaning services are taken by the business entity. Now, all these, let's say INR 100, and all these purchases which you've done, there will be a certain levy of GST at different rate. Broadly, there are 4 structures which go 5, 12, 18, and 20. Now, let's say I take an example of 100 INR, on which we have paid, let's say, 18 rupees tax. The business entity has paid 18 rupees tax. Assuming it that all these 18 rupee tax is a creditable tax, that means I'll be able to use this 18 rupee tax towards my output liability, which comes. Now, let's say I sell a particular hardware or a particular chair at 200 rupees, and a tax on it is, let's say, 18%, which comes out to 36. Now, the 18 rupees which I have paid it towards my procurement, which I paid it towards, the basic, towards IGST or towards the import or domestic purchases, I can set off against the output liability of 36. Therefore, net which I have to pay will always be 18 rupees. That is. So therefore, the intent of the government, as I said, to allow the seamless flow of credit, which is coming on the procurement side, and to set off this credit against the outward supply. So that's how broadly the GST will work under that's how the input and the output and the supply chain, what we call, will work under the GST design. As I said, it is important for us to understand the supply chain. At the end of the day, it is the supply chain where this levy comes into picture. Now, moving on to the top 10 must-know concepts. Before we dwell into these top 10 must-know concepts, I would tell you that there are a lot of intricacies and nuances involved. Being it a law, the GST law is still at a nascent stage. 4 years of journey, there have been definitely a lot of, changes, amendments which have happened. There have been plethoras of rulings, advanced ruling, high courts have given their different verdicts, some in favor of a taxpayer and some in favor of the revenue authorities. But what we have here tried to give you a brief overview of these concepts, which I said, it's must for you to know before you enter into a profession, or start your business, or being an aspiring indirect tax professional or a lawyer. So broadly, we'll start with these concepts. The first concept is the supply concept. This is one of the most important concepts under the GST law. Why do I say that? Because this is the section through which the tax is charged. This is the event where the levy triggers on a particular transaction. I'll be telling a very interesting thing, under the erstwhile indirect tax regime. There was a word under the excise which was called the manufacture. And probably that word manufacture would have witnessed a 70 years of litigation and still the courts couldn't give what was the perfect definition of a manufacture. Similarly, supply, though the law has tried to give a definition of, what supply includes, but still what we foresee that it's a very broad ambit which is given in the definition of supply. Now, starting with, the interesting part is the section 7, which defines of the Central Goods and Service Tax Act, which defines supplies. Now, the supply under section 7 basically starts with includes. It doesn't say means, it says includes. So therefore, anything and everything, it basically says anything and everything, it will get included in the definition of supply and does not tell what per se supply means. So let's see what are the inclusions under the definition of supply. Starting with. So basically, broadly, there are 4 inclusions which are there under the definition of supply. First, supply of goods or services in the form of sale, barter, exchange, license, rental, lease, or disposal made for a consideration by a person in the furtherance of business. So that's the first. What are the important? There has to be a sale, transfer, barter, exchange, license, rental, lease, disposal made for a consideration by a person in furtherance of business. So that means there has to be a consideration and it has to be in course of a business. Second is the import of service for a consideration. That means there has to be an import of service. What is an import of service? Let's take an example. If today I buy a software service from Google, I buy a software service or I take some consultancy service, let's say from E-Invoicing. So that's nothing but an import of service, but there has to be a consideration attached to it. So that will also qualify under the definition of supply. The third part to it is Schedule 1. This is one of the most interesting part in the definition of supply. Activities which are to be treated as supply, even if it is made without a consideration, which is also termed as a deemed supply. So what it says that even if I provide something which is even without consideration, then also it takes the color of a supply. Now, what are these transactions? Just to give you an example, let's say an employer gives a gift to an employee of, let's say, worth a watch of 60,000. Is that a supply? Yes, that is a supply and will fall within the ambit of GST. Let's say there's a permanent transfer of business asset where ITC has been taken. Let's say I bought a chair or I bought any fixed asset on which I had, let's say I bought a chair of INR 100 and a tax was charged 18% and I take an input tax credit of that particular 18 rupees. Now, after 1 year, I sell this chair to, let's say, person X without even charging anything. Even though I have not charged anything, but I have taken the benefit of 18 rupees ITC, it will amount to supply, and there has to be a value assigned to it, and GST shall be charged on it. So that's the most interesting part of the definition, third part of the definition of supply. Schedule 2, activities to be treated as a supply of goods or services. Now, Schedule 2 is basically gives out a lot of activities which are to be treated, what is to be treated as good and what is to be treated as services. There's a list of activities which are given under that. I'll give you a few examples. That simple example that is the transfer of title in good is a supply of good. Let's say today I go to a mall and I buy 2 t-shirts. That's nothing but a supply of good, which is for a consideration. Another is transfer permitting to use IPR is treated as a supply of service. I transfer a copyright or something. All these things will be treated as a supply of service. So law, specifically tells that there has to be certain activities, law specific list down what is a service, what is a good. So it's to an extent, it still makes life easy for us to understand. But as I said, it is an inclusive definition and does not provide what it means. So basically, it is still prone to a lot of litigation. And still, I'm telling you, even as I said, like under a manufacture also, it was a 70-year law of litigation, and we still don't know how manufacture is. What is the exact definition of manufacture? We as an indirect tax professionals still have to look at so many judgments to understand the process, what is a manufacture. Similarly, the term definition will undergo the test of time, and we have to see how this constitutional court will interpret this definition of supply. Now, what is interesting given under the definition of supply is also what it does not include. Activities treated neither as supply of goods nor services. Schedule 3. So basically, this is an exclusion part of the definition, which says that following activities shall not be treated as a supply of good or services. Now, what are these? Let's look at which comes under Schedule 3. Services by an employer to employee in course of an employment shall not be treated as a supply of goods or services. Let's say, if today I'm employed by an X company and I withdraw a salary from that company, will that be a service? Will I have to put a GST on it? No, that's a salary. That's in the nature of course of an employment. There is an employment agreement to it. And therefore, such transactions would not fall within the ambit of GST. And these are not really considered as within the definition of supply. Services by court, tribunals, and services of funeral and burials are transactions which doesn't fall within the ambit of supply. The second exclusion part is activities or transaction undertaken with the central government, state government, or any local authority in which they are engaged as a public authority, as may be notified. So any services which is provided by the central governments under, as a public authority or something, which are notified, as it has to be notified by the central government, only those particular services will not be treated as a supply of goods or services. So that's the definition of supply. Now moving on to what are the different types of supplies which may exist under the GST? Broadly, there are 4 categories or 4 natures of supply which exist under the GST. One is the nil rated supply. Second is the non-taxable supplies. Third is the exempt supply. And fourth is the zero rated supply. This is a very common, most of us get confused. What is the difference between a nil rated and a non-taxable supply, or an exempt supply, or a zero rated supply? So let's broadly understand what is it. Nil rated supplies are the goods and services with GST is zero, is applicable at zero. An example would be, the hotel accommodation with a tariff below 1,000 is not subject to GST, but a hotel tariff accommodation more than 1,000 is subject to GST. So there's no nil rate. Okay? Non-taxable supplies are those goods and services which are not covered under the ambit of GST. The example for this will be the supply of alcohol for human consumption. They are not within the ambit of GST. Therefore, they were not taxable under the GST. Exempt supplies are those supplies which are exempt by particular notification. There is an exemption notification under GST for services as well as for goods. So goods which have been specifically exempted under the GST are called as an exempt supply, like printed books and newspapers. The fourth category is the zero-rated supply. What is the zero-rated supply? The zero-rated supplies are those supplies where goods or services are exported to SEZ or exported outside India and tax is charged at the zero. The best example for this is, let's say, if I export clothes to Dubai, that's a zero-rated supply. The tax charge will be zero. And in these supplies, I'll be able to take the input tax benefit of an input tax credit. So that is the whole concept of supply and various types of supplies which exist under the GST regime. Moving on to the next important concept under GST is the composite supply and the mixed supply. Now, this is one of the most interesting concepts which has been envisaged under the GST regime, is the composite supply and the mixed supply. These do existed somewhere, under the erstwhile regime, but these have been very well defined under the GST regime. Now, let's understand what is a composite supply and what is a mixed supply. These are very critical from a business perspective and also from a perspective of an indirect tax professional, because it's important to determine what is the nature of the supply. Unless this is not determined what is the nature of the supply, the correct tax may not be charged by the person. So let's understand what is a composite supply. Composite supplies are 2 or more supplies of goods or services of both, naturally bundled, supplied in conjunction in ordinary course of business, where one is the principal supply. So what does it mean? So let's take a simple example. If I buy a goods and I say, I buy a goods from you, and I say that you have to provide me these goods. Let's say I buy it from Rajasthan and I say you have to provide me these goods to Delhi, which will include the transportation cost and insurance cost. Now, goods plus insurance plus transportation is basically 3 services that supply. You cannot provide me goods without providing transportation, and I would not stand alone take a transportation service or an insurance service. So the transportation and insurance services are naturally bundled with a delivery of goods. So therefore, my intent of the transaction is to buy goods. As a result of this, you're providing me transportation and insurance services. So therefore, the principal supply in this particular example would be the supply of goods. So therefore, tax has to be charged based on the principal supply. That is the good, whatever the rate will be applicable to that particular good, that tax rate will be charged in case of a composite supply. There can be a lot other examples which we face on day-to-day basis. A mobile charging. My intent is to buy, when you buy a mobile, it's a composite supply, right? So all those examples, there are a lot of examples which we see on a daily basis. When we go to a saloon, we take certain services, saloon services. They use certain goods also. So all these are ancillary. My main intent is to obtain the services of a saloon. So the principal supply in those will be a saloon service. So that's the concept of a composite supply. Now let's see what is the difference between the mixed supply. Let's understand what is the concept of mixed supply. Mixed supplies are 2 or more individual supplies of goods or services of both, made in conjunction for a single price, where supply is not composite. So let's take, there are different goods which come together and basically sold at a single price. The best example would be, let's say when we go to, Diwali, we see a lot of Diwali buckets, those gift hampers having cakes, fruits, chocolates, juices, and dry fruits. Now, all these goods can be sold individually. They do have their individual identity and can be sold. But probably we have put together to sold them as a hamper. So can be sold individually and are not dependent on each other. So I can sell those cakes, fruits, and dry fruits individually also, and I can put them in one hamper and sell them at a single price also. That's basically entirely the business call which business does. So what happened in these cases? In these cases, the goods which are subject to the higher rate, let's say if there is a cake, fruit, chocolate, and a dry fruits, if fruits are subject to 5% GST and dry fruits are subject to 18% GST, all the goods in the bucket will be subject to 18% GST. So in the mixed supply, the goods having the highest rate will be subject to tax, and the other goods will also be subject to that tax rate. So that's the concept of a composite and a mixed supply. As I said, it is important for us to understand this concept. It is important to determine in a particular transaction whether it is a composite supply or mixed supply. If we don't do that, we will not be able to identify what is the correct tax or the correct tax rate which shall be applicable on such kind of transactions. Moving forward is the registration requirement. Whether a person is required, what are the criteria that a person is required to register under Gst Design is something we really have to look. And probably I must say since 2017 until today, there have been a lot of changes in terms of turnover, in terms of a lot of amendments have been made. Initially, there was an understanding, anybody would provide any service. Let's say if I'm an artist and I stay in Delhi and I have to provide services in Haryana, then probably I have to take a registration because it's an interstate supply, even if it's 1 rupees. But however, the GST law became more matured law. They made certain amendments. So over a period of time, there have been certain amendments, and how things stand today, let's look at it. So the businesses first will look at the supply of goods. That is the intrastate turnover in FI is more than 40 lakhs. So if your turnover, when I say an intrastate turnover, specifically in goods, that is your sale in the same state is more than 40 lakhs. These are the normal states, not the special category states. The special category states are basically your Mizoram, Meghalaya, all those are a special category state. So the turnover in normal states like Rajasthan, Maharashtra, Delhi would be 40 lakhs. If your turnover is more than 40 lakhs, you are required to take a registration under the GST law. In other states, smaller states, if your turnover is 20 lakhs, you are required to take a registration. Another case is the supply of services. For services, the turnover for the normal category is 20 lakhs, and for the special category states, it's 10 lakh. As I said, for goods specifically, if there is a sale of even 1 rupee, that is the interstate transaction, if I sell a good from, let's say, Rajasthan to Haryana, I will have to take a registration irrespective of my turnover I cross it. As soon as there's an interstate taxable supply of good, you are required to take a registration under GST. So these are the categories where you're compulsory required to take a registrations. Person making an interstate taxable supply of goods, person who are required to pay tax under the reverse charge basis. So there will be concept which will come under the reverse charge, and in one of these 10 concepts, and I'll explain. Casual taxable persons making a taxable supply is again required to take registrations. Persons who make taxable supply of goods or services on behalf of other taxable, whether as an agent or otherwise. If you make something on behalf of the agent, then you will still have to take a registrations. And such other persons which may be notified by the government. The government has the power to notify any state, persons where you'll compulsory have to take a registration. These are just a key pointer. There are other also where there are other taxpayers where they're compulsory required to take a registration, like an e-commerce operators. These are just a broad category to give you a flavor that there are certain categories where there is a mandatory requirement to register. Moving on to the next part of the registration is What are the people who are not required to take registration? So if I'm engaged into 100% exempt supply of goods or services, I'm not required to take a registration. Let's say if I'm engaged in a printing paper or a newspaper, which is 100% exempt, then I'm not required to take a registration because my turnover is exempt under the GST law. Agriculture is that is supply of produce out of a cultivation of land. All those agriculturists who supply these wheat and all. So all those agriculturists are also not required to take any registration under the GST. And other is where the tax is payable on reverse charge by the recipient. Now, if let's say today I'm a lawyer and my tax is paid by the person who is receiving it, then I'm not required to pay, I'm not required to register. So there's a specific exemption which has been given where a particular business is providing a service where tax is paid by the recipient. In those cases, I may not be required to register under the GST law. The fourth important concept, moving on, is the input tax credit. This is one of the most critical aspects which the GST framework had basically focused on giving a seamless input tax credit to the businesses. As I said, that the input tax credit, there are a lot of sections, section 16, 17, which deals with input tax credit. What we have to first understand, what is the input tax credit? As I said, that the input tax credit is nothing but a tax which is already paid in the procurement of inputs, services, and which can be reduced from paying tax on output. In a simple example, let's say, if I purchase a stationery of 100, I have paid tax 5 rupees, and my output is, let's say, 100, and I pay tax at the 18%, then will I be able to adjust this 5, which I have paid as an input tax credit against the 18 tax? So I'll be able to adjust that 5 rupees against 18 rupees, and my net tax liability in that case will be 13 rupees. So this is basically an example which I try to explain the input tax credit. That is the purchase of pencil of INR 100. I pay input tax of 5 rupees, that is 105. I sell this as 120 and pay, and the output tax is 6. The net GST which has to be deposited is 6 minus 5, that is 1 rupees. And therefore I get a benefit of this input tax. That is where the intent of the GST is to allow the seamless flow of input tax credit. I pay 5 rupees to the vendor and I get the input tax credit? Is that so? Or there certain things which I have to be mindful as a buyer to ensure that I get the input tax credit? So law prescribes, basically section 16 prescribes of the CGST Act, prescribes certain conditions, while you take any benefit under any tax laws, you have to be really mindful of taking such benefits. A 5 is a benefit which is given to the business entities. What are those points which as a buyer or which, as a recipient, I have to be mindful? Let's go through it. So these are the conditions, these are the points where you have to be mindful while you're availing the input tax credit. In the example, what we were discussing of the 5 INR. So you have to have, while you're availing a benefit of 5, you need to have a valid tax invoice. When I say a valid tax invoice, it has to be a proper tax invoice as per the GST law, which currently is an E-Invoice format. It has to be an original with you and having all content of a tax invoice. Second most condition, it has to be goods and services should have been received by the person availing this benefit of 5 INR. It is not that if you've not received the goods and you only received a tax invoice. No, it will not happen. It may lead to a fake ITC, and which will the tax authorities may catch hold of all this. GST returns have been filed. Now, this is something, a very interesting conditions which has been given, but somewhere, they say that, it has to be reflected in your GST RTA. So as a compliance, we have to be sure that, the person who is giving this has ensured that has filed the return. Tax has been paid to the government by the supplier. The benefit which you are taking, you have to ensure that GST, that this 5 rupees has been paid to the government exchequer, and it's not that it is only kept to the vendor. Payment has been made to the supplier within 180 days to the date of invoice, a very important condition. And in the example which we were talking about, while we are availing the benefit of 5 rupees, we have to be mindful that these 5 rupees, that I have done the payment of 105 within 180 days from the date of invoice. If I'm taking this benefit, I have to be sure that as a buyer, it is my duty to pay this amount of this payment to the supplier. When the goods are received in installment, ITC can only be obtained when the last lot is received. If there's an installment payment, you can take only when the last payment of installment is done. No ITC will be allowed if the depreciation has been claimed in the tax component. This is a very simple. If let's say 100 rupees and 18 rupees I tax a charge. If 18 rupees has been capitalized in books of account as a depreciation, then I will not be allowed to claim that input tax. You have a choice either to avail the input tax or to avail a depreciation. Then probably from a business perspective, you will have to do a cost-benefit analysis. Time limit, it is very important. This 5 rupees, what we are talking about, let's say today we are standing on we're standing in August 21. When can I take this 5 rupees credit? Can I set off it for infinite years? No, you cannot set it for the infinite years. There is a time limit which is prescribed under the law, which says that for the financial year, let's say we are sitting in 21-22, I can avail this till September 22. That's basically precisely if we say 1.5 years in a financial year. So you have to be very mindful. You have to be mindful of the time limits. You cannot use this 5 rupees credit whenever you feel like. We have to be sure that these time limits are taken care of. If we don't take care of these time limits, this 5 rupees will be basically a cost in the hands of the entity. Coming to the fifth concept, which is continuing with the input tax credit. This is also very important, as I said, that the intent of the GST law was to allow the input tax credit. But however, at the same time, it was also important for the for the lawmakers to ensure that certain credits are not taken, which are not allowed. So they have to be restricted. Like motor vehicles for transportation of person with sitting capacity of less than or equal to 13 of vessels in our aircraft are not allowed. So motor vehicles which are with having a sitting capacity of less than or equal to 13, you're not allowed to take a credit. In simple words, if I'm a business entity today, let's say I buy a Fortuner car, or I buy a car for my use, I will not be able to take that credit. Most of it, there's a very common question which comes up. If I buy today, I buy a Fortuner or buy an i10, will I be able to credit? Will I be able to take credit? No, you will not be able to take credit of such. Goods and services on which GST is paid and is used for personal use. Any goods which are used for personal use, you will not be able to take the credits. So you have to be mindful that only it is the goods which are used for business purpose. Credits are taken only for those goods and services. Foods and beverages, outdoor catering, beauty treatments, health service, cosmetic, plastic, life insurance, health insurance, which are not used for making same output supply. Again, all those business entities, which, if I bet, let's say I bought a pantry food, I bought chips packets or coffee or water or something, I buy it for my office for daily purposes. Or I give a medical insurance to my employees or a life insurance to my employees. Will I be able to take those credits? No, you will not be able to take credits because it's specifically restricted under Section 17(5) of the GST Act. So therefore, why I say we have to be really mindful, though the intent of the government is to allow the stimulus credit, but there are certain checks and balances which are given under the law. And we have to be sure that, we do not take these credits. Because if we take that somewhere, this is a default, probably tax authorities will come up and ask us for the tax demands. Any membership of gym or clubs, like say today I take a membership of a gymkhana club or I take a One Horizon club or any membership of a, let's say, a fitness gym I take. No, you will not be able to take any such credits in respect of it. Travel benefits which are given to employees on vacation or a home travel concession, except which are mandated by law, you will not be able to take all such credits. Goods lost, stolen, written off, given as free samples, again, you will not be allowed to take all such credits. You'll have to be mindful. You'll have to assess it from a business standpoint. And as I said, specifically free samples is in itself a very big industry issue. There have been circulars and clarifications which have been issued. Most of the business entities say, we give free samples as a part of our business promotions, It is necessary for us to do it. A lot of time when we see the Beriton sale, buy one, get one. So in all those cases, will it be required? So all these have been clarified over a period of 4 years. This somewhere has been, had tested the time, the authorities, the revenue authority, the courts have clarified it. But as I said, it's still prone to litigation. There are different views across different courts. Now, this is a very important concept we have to remember under the input tax credit. as I said, that there are three taxes which we see under the GST law, which we must have witnessed: CGST and SGST, and third is the IGST. So the CGST credit can be set off against CGST and IGST liability. SGST can be used against SGST and IGST. IGST can be used against CGST and SGST, but SGST and CGST cannot be set off against each other. We have to be mindful that if there is a tax liability of C and S, and I have a credit of C, and for some reason I don't have a credit of S, I will not be able to set off against C, because C and S cannot be set off against each other. So we have to be really mindful of this. The fifth concept, which is the most important concept, is the valuation concept. So as I said, it is important to determine what shall be the value. It is important to determine what shall be the value of the transaction. If I supply a particular, I have to be sure what shall be the value in terms of what shall be the taxable base value on which a tax has to be charged. Is there some rule which is given under the law? Definitely yes, certainly yes. Section 15 of the GST Act specifically provides how evaluation has to be done. So Section 15, which says that GST paid on a transaction value, that is price actually paid for goods and services. It says whatever you recover from the recipient of service or buyer. Let's say if I recover 100 rupees, and let's say I also recover some taxes. Let's say 105 rupees I receive some tax which I have paid it. Let's say a municipal tax or a property tax. So I recover 105. What will be the taxable value for whether it will be 100 or 5? With all these questions, let's say if I recover cab charges for my client, let's say 20 rupees, 20 INR is a cab charges. So will that 20 rupees will also be a part of the consideration, will also be a part of value of supply, that is 125. Will I have to levy tax on 125 or not? It's something we really have to find out. How does law? If I give a discount, what shall be the total? So let's see how does law looks at in terms of finding evaluation. So law says any taxes, duties, and cess and charges levied under any law, any other act, example, custom duties, shall form a part of value of supply. Let's say 100 is the best example as we took was. 5 rupees is the custom duty. Then will 5 rupees form part of a value of supply? Definitely yes. 5 rupees will form a part of supply, and 105 will be a value in which tax has to be charged. A law says any amount payable by the supplier but incurred with the recipient are not included in the price. Any amount which is payable in respect to the supply which have been done will also be included. Any incidental expenses, like I said, a conveyance expenses, packing expenses, a packing of a good, if I charge something over and above, then also it will be included. Let's say I charge 10 rupees a conveyance, the 20 rupees a conveyance in the example which you were talking about, that 125 will be there. Subsidies except government subsidies. So it will also include any subsidies which is given, but not any government subsidies. Interest, late fee, and penalties will also be included. Let's say if you don't make me a payment of 125, let's say within a period of 30 days, and you may charge as a supplier of service, you may charge a 1% late fee. Will that be also included? Definitely yes, it will be included because law clearly says interest, late fee, penalty for delayed payment will be included. Then what is excluded? Let's say any pre-sale or post-sale discounts are excluded from the definition. Now let's say if I go, so before we go dwell much into exclusion, let's see how does the inclusion, the example which you were talking about, 100, 20 was the conveyance charge, 5 was the custom duty. So 125 basically remains our value on which GST shall be charged, be it 5%, 12%, 18%, or 28%. Now, how does the exclusion work? Let's take a simple example for the exclusion. Let's say if my assessable value is INR 1,000 and you give me a discount, let's say the supplier give me a discount of 20%, that's 200, then the transaction value will be 800. And IGST, let's say, is charged at 5%, then I have to charge GST on 800 rupees. That is 5% of 800 will be 840. So the 840 rupees will be the total amount which will be payable by the customer. We have to be sure that these discounts are shown on a tax invoice. Therefore, that's why we say that in this particular case, the discount will, in these cases, discount will be excluded. Any discount while you go to a Benetton shop and we see 50% sale. So first they will always show 1,000 rupees, and then they will show 50% discount, 500, and the tax will be on the component of 500 rupees. So that's where, these discounts have been excluded for calculation or for purpose of computing or valuing a particular transaction. As I said, moving on to the next point, there's something called an artificial valuation under the GST law. These are relevant when the supplies are made between distinct and related persons. So as we see, we saw that there was a requirement to make a registration. We saw it in that there's certain requirements which are made to be registration. So what happens? I'll give you a very case. Let's say an example, say X company has different 20 offices in Panover and has India. So usually, while you calculate, the turnover limits, what we were discussing, that 40 lakh, 20 lakhs, we calculate on a pan-India basis. Under GST, every 20 registration is a distinct person. That means if today X company has 20 offices, let's say in Bombay, Delhi, from a GST perspective, every office of Delhi and Bombay is an independent and a separate and a distinct entity. So if I have to provide some services, like Delhi being a corporate office, provide certain services to Bombay, then there has to be a valuation with respect to what is that value of service. I will have to determine those things in terms of, that is called an artificial valuation in terms of the deemed supply, what we discussed. So in those cases, we'll have to be mindful. What shall be the valuation? What shall be the value of supply in those cases? So that, why the valuation is very important, because at the end of the day, the tax which is going to the government exchequer is getting levied on this number. If this number is large, the government gets more taxes. If this number is small, the government tax less taxes. So therefore, we'll have to be very mindful so that there is no evasion of tax at either end, and there is no excess tax also, which is paid by the government. So therefore, we have to be mindful of these artificial valuations which are imbibed under the law. As I said, there are different tax rates given under the law, 5, 12, 18, and 28. And plus, there is compensation sense of few products. So therefore, it depends on, certain luxury products, cars after, all those, big cars, which are luxury cars like BMW, there's certain compensation sets which have been given under the GST law. As I said, the classification of goods and services is very critical for charging a valuation or a tax rate. It is a very critical. We've seen a lot of examples, which I had given it in earlier also, that lassi, which is exempt, but flavored milk is not exempt. So therefore, we have to be very mindful of classifying a particular product or a service under a right classification is a very important in the GST law, so that we reach a right tax rate. As I said, for a tax rate and evaluation perspective also, it is important for us to understand concept of a mixed supply, what we said. Mixed supply, as I said, will be subject to tax rate, which is at the principal supply. So what will be the main supply? It will be the tax rate, which shall be calculated in case of a composite supply. And what we discuss in case of a mixed supply, the highest tax rate in the bouquet of things will be that rate that will be applicable in case of a mixed supply. So therefore, valuation and tax rates basically go hand in hand and are very important while we are dealing with the transactions of supply in the GST. Coming on to the sixth concept is the place of supply concept. As I said, the place of supply is a very, very important and a very pertinent concept which we should know while we are levying a tax in the GST. Why do I say so? What happens in a particular case is that, if we do not determine a correct tax or correct place of supply, probably the chances of making errors where the tax have been deposited in the correct state are more. One state, as I said, that we are following a dual levy, we are following a dual system where one tax is deposited at the state level and one tax is deposited at the central level. Therefore, it becomes important for us to determine the correct place of supply, because it is on the basis of the place of supply that a tax will be deposited and in that particular state. So place of supply provisions are relevant to determine place where the goods and services are supplied and the location of the service provider and service recipient. So as I said, in order to determine a particular transaction is an interstate or an intrastate supply, there are two things which we look at. One is the place of supply, and second is the location of the supplier. If location of the supplier and place of supply are in the same state or in different state, then the transaction either become an interstate supply or an intrastate supply. Now let's look at what are these rules for a place of supply. As I said, the GST law does not make, there's a single tax rate for both goods and services, but the inherent nature of the supply of goods and services are different. So therefore, there are different set of rules for place of supply for services. There are different set of rules for place of supply for goods. Okay. So let's understand what are the place of supply rules for goods first. And there are different, as I said, there can be a transaction of a domestic supply, and there can be a transaction for overseas supply of goods. So there are different set of rules. Let's understand what are these different set of rules. First is the movement of goods. Where there's a movement of goods, let's say the goods move from one place to another. So the goods where the terminates shall be the place of supply. Let's say good move from Rajasthan to Maharashtra. The place of supply shall be Maharashtra because the movement terminates there. And as we all know, GST is a destination-based tax. So in all those cases, the place of supply shall be the destination where the goods reached. Supply under a direction of a third person, which is nothing but a bill to ship to model. If X asks me to deliver certain goods to Y, so then A, X, and Y are in three different states. What shall be? It was the principal place of business of a third person who give me the directions. Third is the over-the-counter sale. Let's say today I go to a shopping mall and buy a good. So it's a counter sale. So what shall be the place of supply? It shall be the location of goods during the delivery. So if I go today, let's say I go to an ambience mall in Gurgaon, in Haryana, and I buy a t-shirt over the counter. So the place of supply, because I was in Haryana, I took the goods in Haryana. So therefore it will be, the place of supply will be Haryana. So the tax that will be deposited in the state of Haryana by the supplier of goods and services. In case where there involves goods installation, it will be the location of goods. Let's say an AC installation happens, a Delhi from vendor comes and install AC at Haryana. So in those cases, it will be the location where the goods have been installed. So in that case, the place of supply of the goods shall be the location of such installation. Supply on board a train or a vessel or aircraft, location where goods taken on board. From where the goods have been taken on board shall be the place of supply. Goods imported in India shall be the location of the importer. When I import a certain goods, as it's a destination-based tax, goods have been imported in India. So therefore, it will be the importer who will pay tax in India, as we said, IGST. Goods exported outside India, it's a destination-based tax again. So the place of supply of such goods will be outside India and hence will not be subject to GST. Coming to the place of supply rules for services. As I said, there are different rules for services. We will not discuss all of them in detail, but just broadly few we have discussed it here to give you a flavor. How does the service look? Let's say if I provide a service which is in relation to an immobile property, let's say an architecture service or something, I do an interior designing services or a facility management services. So all these are in relation to the particular immobile property and identified immobile property. So in all those cases, the place of supply will be the place where the property is located. The location of if I do, let's say I'm an interior designer registered under Delhi. I do an interior designing in Haryana. So the property is located in Haryana, my client. So for me, the place of supply shall be Haryana. So in that case, I will have to charge IGST with the place of supply is Haryana and tax will be deposited in Haryana. So therefore, I say we have to be very mindful of determining the place of supply because at the end of the day, it determines to which state the tax shall be deposited. Now, let's say, these personal grooming services, performance-based services. So all these services shall be the location where the services are performed. Organization of sporting, cultural events and all these shall be the location where the event actually takes place. So in all these cases, which are performance-based service, event-based service. So in all those cases, the place of supply shall be the place where the performance is made, or the event is in. Let's say today I go and make an event. I do it in physical event in Maharashtra. So for that cases, the place of supply of services shall be Maharashtra. So I'll have to be mindful to determine the place of supply. Email, the transportation of goods service, including email and courier. So again, it will be the goods where the goods have been handled in case of a location of basically the location of such person in case of a registered person. In case it's any individual which are not registered in GST law, it shall be the goods where it has been handed over, goods where have been handed over. The coming to the another concept and is called the reverse charge mechanism. Very important concept, have been there in almost across the world in indirect tax regime. So what is the reverse charge concept? A very not very new concept to indirect tax professionals. It even existed even during the erstwhile tax regime. It even existed in other countries, be it a GCC country or a European countries. The intent of the reverse charge mechanism is that that there is no the tax is paid on a transaction. It only changes the mechanism. It diverts the liability to pay tax on the other person. Let's understand what with a simple example. Let's say today if I import software services. Let's say I import a software services from Apple or from Google. What will happen in those cases? I will be liable to pay tax because they may not be registered. As a recipient of service, the liability to pay tax come under me. So what is the reverse charge concept if I put it in the simple word? Under reverse charge mechanism, the liability to pay tax is on the recipient of goods and services instead of the supplier in respect of specific categories of service such as legal services, advocates, law firm and sponsorship, etc. So what does the reverse charge says? So basically under reverse charge mechanism, there are a lot of services, there are certain domestic services which have been identified in the law. Let's say legal services, one of those services, sponsorship services, another services, where as a law firm, if I have to provide you services, I don't have to take, you have to discharge, a business entity has to discharge a tax under reverse charge. Why? It is because the reverse charge is such which says that in spite of the recipient, in spite of the supplier of service, the liability to pay tax comes on the recipient of service. As I said, the reverse charge is applicable on two things. One are the notified domestic services like legal service, which have been notified in the law and have time to time have been notified in the law. And second is the category of import of services. ITC, now what is the most interesting thing? If I pay this tax, will I be able to take ITC? Yes, you will be able to take input tax credit like any other normal tax credit which you take on your procurement side. What is most critical to also understand is that, while you're discharging this liability under reverse charge, be mindful that you can discharge only in cash and you can only be made in cash, and you cannot pay this liability by offsetting or utilizing your input tax credit. Therefore, you have to be mindful that any reverse charge liability has to be made. It has to be made in cash and not by utilizing the input tax credit. As I said, that there are relevant provisions with respect to place and time of supply, which are also applicable in reverse charge mechanism. So even in case of reverse charge, when is the liability to pay tax arises? What shall be the place of supply for these services, whether it shall be IGST, CGST. So there are relevant provisions in the law which need to be determined as and when, there are a lot of provisions. So basically, I'm just giving you a broader perspective that it happens in GST. Another important thing, while you do a reverse charge mechanism, which we should know, that a reverse charge is basically a tax which a recipient of service pays. So therefore, it is important for you to raise a document which is also called as a self-invoicing at the time of making the payment to the supplier in case where the reverse charge is applicable. You need to have an internal document which is also called as a self-invoicing while you discharge this payments of liability. That's a requirement, a kind of a procedural requirement which is given in the law. So that, that today when the department comes for assessment or audit, they can always track, there's a document to it which tax have been paid. So this is basically the concept of the reverse charge mechanism under the GST law. Moving on to the eighth concept, that is the zero-rated supply. This is one of the most, I would say, a very simple concept which has been given under the GST law, is the zero-rated supply. Zero-rated supply is basically a supply where tax is charged at zero. And as a supplier, you're able to take the input tax credit, that the rate of tax charge on such supply is zero. A ITC of input is available for zero rated supply, and person exclusively making zero rated supply would have to apply for refund of unutilized ITC in either of the two ways. So when I say zero rated supplies, so there are two concepts which comes under it. What is a zero rated supply? As I said, the tax will be zero, and you'll be able to claim the input tax credit of the input which is available. Okay, so the tax is zero, but on the procurement side, whatever you have ITC, you'll be able to take claim. So in those cases, while you're availing an input, while you don't avail an input, but you charge tax, you'll have to apply for it. Okay? But in cases, let's say I have an option of making a payment, then I will have to claim a refund of the tax paid on the output side. So zero-rated supply is basically those transactions broadly involve two categories. One is the export of goods and services. So you need to have a proper documentation to prove that the transaction is a zero-rated supply. There is an export of goods and services. And second category of zero-rated supply is supply of goods and services to SEZ unit and developer for authorized operations. That's the second category of the zero-rated supply. So as I said, that whenever you take any benefit under the GST law, you have to be really mindful that any benefits which are taken or any exemptions which are claimed, there has to be a proper documentation to establish that you've taken a particular exemption or benefit under GST law. As I said, that zero rated is an export of goods and services. You need to have a proper documentation to establish that this is a zero rated supply. You need to have a proper, subject to the conditions which are given under export. There are certain conditions which you have to fulfill. Then there's a concept, supply of goods to SEZ unit or developer for authorized operations. You need to have a proper documentation, agreements, etc. in place to ensure that these goods have been delivered or services have been delivered to SEZ for authorized operations. Now, as I said, that while you do such transactions, you're required to take certain approvals. Before you enter into zero-rated supply, you need to take an approval from the government GST authority online portal, which is called the letter of undertaking, which has to be applied online. So that's, as I said, it's a very important concept under the GST law, that is a zero-rated supply. Moving on to the next supply, one of the next concept under the GST law is E-Invoicing concept. As I said, E-Invoicing is a very important, probably one of the most talked around, which probably the intent of the government was to implement as soon as possible, and the government had been doing it in the phased manner. E-invoicing is really a concept which has actually changed the entire matrix, and probably have changed the entire mechanics of industry in terms of the software, accounting, and probably we are moving more toward digitalization, I may say, if I may say that the government intent is also, to digitalize everything so that the manual invoices, basically which happens is not happening anymore. As a result of which there will be, the government basically wants to keep a check on the, if I may say, and be correct in saying that, they want to keep a check on the fake ITC invoices, which is a very common, which is a very common practice, probably under erstwhile tax regime. But the intent of the government is to, catch hold of such practices and brought under the ambit of the GST regime. So as I said, the government intent to bring this e-invoicing and have actually brought it quite successful. Most of the businesses have implemented it. But obviously, as we said, the GST law is at a nascent stage. There are certain issues there are certain teething issues which still are facing on. The mandatory e-invoice requirement, it came actually first in the October 2020, with the company having turnover 500 CR. So obviously the intent of the government was to bring this in a phased manner. So first to test because obviously implementing e-invoicing in a 500 CR turnover company is a big task. And obviously it's a software change, it's a mindset change, it's an accounting change, which may not be easy to accept, but probably with digitalization and being COVID into picture, the industry have been able to move more towards this concept. So for businesses whose turnover was more than 500 crores, the e-invoicing was implemented on 1st of October 2020. Uh, for 1st of January 2021, businesses having turnover of more than 100 crore was required to do mandatory invoicing. And from 1st of April 2021, turnovers having company of more than 50 crores were required to do the e-invoicing requirement. Now, what is this e-invoicing requirement? It's a very, what is it? Is it really that I don't need, most of the people, when we also initiated, we thought that there'll be something like, the government will come up with something, I'll have to generate an e-invoice from the government portal. Is that so? Or do I really need to generate that, now I don't need any accounting software or invoicing software in my company. All I have to do it from the government portal. What is it that, that will change the dynamics? So, when this came up, the government issued a lot of clarifications actually. What is this? So just to give you, it's not that, you have to stop your current practice of e-invoice. Whatever your current practice of e-invoice is there, it will continue to be there. All you have to do is that you have to upload your invoice portal, and all these invoice portal will come with a QR code and IRN code that B2b invoices are authenticated. The invoice which you generate are uploaded on the e-invoice portal, which are authenticated by this government, and the government will give you one IRN that is called invoice registration number is generated, and one QR code or a barcode type you will see will be mentioned on the e-invoice. So that's basically the broader intent of e-invoice. It's basically, you have an invoice which has a QR code and IRN. So that, and when you scan this QR code, you get to know typically that this invoice has been generated through a government portal. As I said, the intent of the government to bring this concept of e-invoice was to eliminate the need of manual data entry at the time of filing the returns, resolve gaps in data reconciliation and mismatch, and less scope of manipulation and fake invoices. That's the main motive was to, this fake IT invoices should be stopped. What happened as a result of this, when I generate a sales invoice, this is also to eliminate a lot of manual data entry. We know that at the end of the return, we have to file one sales return. So once I generate an e-invoice from the portal, I really don't have to put my sales. It automatically I can see it on my portal. So it somewhere eliminate a lot of manual entry while we file our, monthly statements, or we file a GSTR1 return. So this really helps in, eliminating a lot of manual. I see, at the end of the month, let's say if I have generated 100 e-invoice, and when I go and file the return of, let's say for the month of August, when I file the return, I see all those 100 invoices are automatically there in my return. Why? Because I generated an e-invoice. So that's where it will somehow resolve a lot of gaps, fake invoicing, and probably the government will have a control over these invoices. So that's the concept of e-invoicing, and it is very important for us. And obviously, from the turnover of more than 50 crores, it's first April and started. Now it's only this SME sectors, below 150 crores, which is also likely to be implemented by the authorities, by the government department. The last concepts under the GST is the GST and the statutory compliances. As I said, we are moving toward the digitalization world, and probably we want everything to be on a virtual platform today. So, GST plays a very backbone of, ensuring a proper GST, an implementation. If we don't have, a proper GST and I say an online portal, which is being handled currently by Infosys, I mean to say the ease of doing business, be it on a taxpayer, with the ease of carrying out compliance as an indirect tax professionals, or for us to understand, it will be very difficult. Therefore, we have to be friendly from the GST portal, because everything and anything from a GST perspective is now maintained online, be it your credit register, be it your tax payments, everything has to be done through online portal. There is no concept of manual payment of GST or something like it. The credit is maintained manual. So everything and anything in GST, be it your payment of tax, return, credits, anything, filing of most of it, we've also seen, the refund applications are also filed online. The show cause notices are also, sometime issued. The authorities, the tax department are also trying to make it more and more, make it online. In ongoing time, definitely, since we are also moving toward a digitalization process, so the government will become more pro in updating this GST network. So as I said, it is important for us to be friendly with the GST portal, We should know how does the portal look like, because all the registration, the cancellation, everything is through the GST portal. There is only in some cases there can be physical verification, but at least the initiation of, be it the cancellation or registration is through an online portal. Last concept, as I said, the statutory compliances. As a tax professional, it is important for us to know what are the key compliances. If I start today as a business, I should know what are the key compliances which I have to take if I'm a small taxpayer or a large taxpayer. Uh, though government have intent to, simplify the procedures, make it less, but somewhere, different people, we have different thoughts about it. People say it's a complex, some say it's, it's little ease of doing business, but somewhere, the government is also, to say, they're also, hand-holded. Uh, they also have to have certain checks and balances in terms of, carrying business, being carried in a fair manner. So these are the compliances which every person has to do. GSTR1. GSTR1 is basically all those companies having turnover of 5 crore. They have to upload their monthly turnover from the 11th of the next month. That's one return where you provide all your sales data. Then there's something called B2b Output Supply. It's basically provided monthly for quarterly returns. All those who are having the quarterly periods, they have to provide an IIF. Monthly, they have to upload their monthly invoice. As I said, the intent of this, uploading is so that, once you file your sales return, the vendor can see that invoice in the GSTR 2A. So that's how the concept is. So it is important. These are the compliances which, as a supplier, I have to do. GSTR 3B, again, I'll have to file. If your turnover is more than 5 crore, you'll have to file it on a monthly basis and make the payment of liability every month. You'll have to do it. If your turnover is, if you fall below and you're opted for a quarterly scheme, then probably you'll have to file only once in every quarter, which is 25th of the subsequent month. And for some, it is 22 and 24, depending on the location of the taxpayer. So 1 and 3B are primarily the takeaway. 1, 3B, and IIF are the key returns which have to be filed. What has to be mindful is the GSTR 3B is a very important and critical return. It is the only return currently it is the only return where your sales data goes as a consolidated number along with your procurements and ITC details. This is a one-pager return which goes on a consolidated basis, not at invoice level data. So therefore, we really have, and this is on the basis of this return, the entity or the individual discharge their liability. So therefore, we really have to be mindful while filing your GSTR 3B return, because currently, once you file your returns, you also make a payment, and possibly there is no provision under the law that you can revise this VAT. You can revise this GSTR return. Moving on to these last two compliances, which are done by GSTR 9 and 9C. 9C is basically an annual return. 9C is basically an annual return, which is prepared on a yearly basis. So once your financial year gets completed, you have to prepare an annual return. And the due date for the annual return is, let's say, for FY 2021, it will be December 22. And along with also, there's a reconciliation statement which has to be filed. That is called the GST audit. So 9 and 9C are the compliance return which have to be filed by every business entity. So broadly, these are the 5 key returns. I'm saying only 5 key returns. There must be other in terms of depending on the business. So currently, these are the 5 returns which are to be taken care of, by any business entity. Coming to the last part of it, just to conclude, these were the 10 concepts. As I said, there are a lot of concepts under the GST law. Probably GST, I would conclude by saying that GST probably has making a symbolic transformation of the erstwhile tax regime. Probably there are certain challenges, and we've not been able, the government has not been able to, give a perfect ease of doing business with the intent which was. But certainly, the government at the end of the day is working to make this GST as easy as possible. There are amendments which are happening on a day-to-day basis. And certainly there are the courts, the constitutional courts are trying to or clarify the position of law. So with this, I would just end my session on the note that we are at the nascent stage and the law is evolving. We have to be part of this evolving journey, and probably with the time, we'll see much more evolution in the GST law. Thanks. With this, I complete my today's webinar. If there are any questions, you can unmute yourself. And we can take the question on one-to-one basis.
Good afternoon, ma'am. Am I audible?
Yeah.
Yes, ma'am. Ma'am, this is Shruti Khanna, and I had a little doubt. Ma'am, if the location of the supplier of services is in India, and the location of the recipient of such a service is outside of India, right? It does not automatically become export of services if the criteria that has been, like if the requirements are not fulfilled. So
Right.
In that case, if it is not fulfilled, then it will not be considered as export of service.
Right.
And if it is not an export, then IGST will be applicable.
Right.
My question here is, then what is the point of saying that GST shall be applicable on taxable territory? Since if the location of the recipient is outside of India, it is outside of taxable territory. But even then, IGST shall be made applicable. So that was
a very relevant point, Shruti Avre. But just to answer you, see what happens in these particular cases. Let's say you said the location of the recipient is outside India and the location of the supplier is in India. Now, since the situs of the transaction could not be proved, that it was outside India, so the by default law says that it will be treated that a transaction has happened in India and therefore tax will be chargeable. Basically, in that cases, we say that a situs, the activities have been performed in India, irrespective of it, the contractual recipient is outside India. So in those cases also, the law specifically say that the situs of the transaction, or the place of supply of the transaction shall be in India. And in those cases, the tax shall be charged and these transactions will be treated as interstate supply of services.
Okay.
I hope that answers your question.
Yes, ma'am. Ma'am, I had another question. Like you stated that when there is a requirement for registration under GST,
Right.
there is a difference between turnovers for special states and for other states, right?
Right.
So I wanted to know why, like if it is in some special states such as Mizoram, as you stated, why is the limit lower? Like, shouldn't it be more?
See, I understand your concern, but probably there the business turnover may have been some different. I mean to say that was the intent of the law would have been. So I think probably the intent of law was to give them a reasonable relaxation in terms of their turnovers. So that may have been the intent of the law. Obviously, we'll have to look at it. What are the other reasons to it? But probably what I can think of right now is that, the intent of law was to give them certain more relaxation. The limits are high because so that they don't have to take a registration, basically. That's the intent of law.
Ma'am, the limits are lower, I guess. I think for other states, you said that it's 40 lakh if the turnover is 40.
So basically, why the limits are low is that basically, see what happens in the different states, like let's say Maharashtra and Rajasthan, okay? There the business transactions are more. There the turnovers are higher, okay? So that's why there the turnovers are higher in those states, and in those are the small states. So that is why the intent of those, the business may be small there. So therefore, to bring them in that ambit. Somebody's. Can you please unmute yourself? Can you please unmute yourself? I think some disturbance is coming. Hello. Am I audible?
Yes, ma'am, you are audible.
Okay.
Ma'am, there are few questions in the chat box as well. So can we take them up?
I'm staying in Delhi and providing a decoration service to a Jaipur client. Then I'm requested to obtain a registration. Since it is only a service, you will not have to take a registration even if it is 1 rupees interstate. You will have to take a registration if you exceed a turnover limit as mentioned. So in that case, you will have to take a registration. But if you don't exceed your threshold turnover limit of 40 lakh, you're not required to take a registration. It is only in case of a goods, Akash, you will have to take a registration where it exceeds, even if it is a sale of 100, it's a sale of 1 rupees goods, then you may have to take a registration. But in case of a service, since you're an interior decorator providing a service, you may not have to take a registration. So that's one question.
Yes, ma'am. One more is there.
I can't see it on my chat box.
Okay, actually, it is a direct message. So should I read it out?
Yeah, you can just either read it out to me.
Yeah. Is law firm required to pay tax? If yes, then under which tax?
Is law firm required to pay
tax?
So as I said, the legal services and law firms come under the category of reverse charge. So therefore, they are not required. The liability to pay tax shifts to a person who is receiving the legal services. So in all those cases, the law firm, the person who is receiving the service from law firm will be required to discharge the tax under the reverse charge mechanism. And as I said, that there is a specific exemption which is given to the all those whose 100% turnover is reverse charge, they are not required to register under the GST regime. So therefore, they'll not be required to, as a law firm will not be required to pay tax. It is the recipient of the supply of good, recipient of those services of law firm will be required to pay tax under the reverse charge basis. Okay. Urmi, anybody else we have to answer? Yeah, is it done for the day?
I'll just check, ma'am. Yes, ma'am, one more question. Is reverse charge mechanism only applicable to legal services? If no, then which are the other categories where this mechanism is applicable?
So as I said, that there are certain categories, to around 8 to 10 categories, which have been notified by the government, which comes under the category of reverse charge, like sponsorship services, So there is a certain list which is given, I think, under notification 11 of the IGST or notification 12, if I remember, just remembering it. So it's not only legal service which come under reverse charge. There are other category of service which have been notified by the government. Those also come under reverse charge services.
Okay, ma'am. Next question is, what are the procedural compliances for firm under RCM, like GTA and legal firm?
So as we said, the compliance for GTA is also one of the categories which come under the reverse charge mechanism. So you will have to pay taxes in your 3B while you're filing the return. At the same time, you will also need to do a self-invoicing. You'll have to have a document for self-invoicing. So therefore, so basically 2 compliances, you'll have to pay tax under the reverse charge in cash, as I said, not utilizing ITC. And also you'll have to have a proper documentation, which is called a self-invoicing under the GST. So these are the 2 compliances which you will have to do.
Another one is, I am an individual running decoration services shop. Would I require to obtain registration under GST?
So as I said, if your turnover exceeds 40 lakh or 20 lakh in whichever state you are, in case of a service, you will have to take a registration. So it depends. In case of a service, it depends on your turnover, be it your inter or intrastate turnover. If your turnover exceeds it, you will have to take a registration. If your turnover does not exceed the threshold which is given, you will not have to take a registration. You will have to see what is your turnover of the previous financial year or what will be your proposed turnover, and accordingly, you will have to take a registration in the GST return. Unmi, any other question? Urvi, can you hear me?
Am I audible, ma'am?
Yeah. Any other questions you have to take for the day?
Yeah, one more, ma'am. Procedural compliance for legal entity itself who is not required to pay tax due to RCM mechanism.
So as I said, if I'm a law firm, if you're not registered, there are no legal compliances which you have to do. I'm saying it from a supplier point of view as a law firm. Again, I repeat it. Being a law firm, if you provide any services to any business entity, the liability to pay tax is on the recipient of service. So therefore, you're not even required to register and not required to do any legal compliance in terms of filing of a return, GST return, or filing of any, any compliances in terms of GST. You're not required to do.
That's it, ma'am.
So I think thanks everyone for sparing your time, for being part of today's afternoon. I'm extremely grateful to all of you who've been a part of this webinar. Thanks one again for everyone for joining this on this Saturday afternoon. With this, I wish you every day have a good day. Stay safe, stay healthy. And thank you everyone. And look forward to seeing you. Okay.
Thank you so much, ma'am, for such an informative session. For most of us who are not aware of all the concepts regarding GST, we are now all good to go with, like, all clear about that. Thank you so much once again, ma'am, for providing us with such a fruitful and insightful session. Due to time constraint, we could not have a detailed session, but we are hopeful for that in the future. Ma'am will be available to guide and enlighten us. Thank you for joining us today and taking out time from your busy schedule, ma'am. We also thank our participants for being patient and cooperative. Stay safe, everyone. Thank you.
Thank you.